In this video, I'm going to take you through 2 live opportunities and show you how you can use an AI-based software like Forecaster to get involved with high quality trades. Let's get stuck in. What I'm going to do is I'm going to go to the quantum screener and I'm going to go to 1 month because I'm looking at trading opportunities, which are shorter term, and I'm looking at the quantum screener, which will basically give us all of this. It will add up and analyze all of the high probability factors that we need to put into a good trading decision. It looks at seasonality, it looks at correlation in price, it looks at the average returns, it looks at the best trading opportunities basically, and it will even give you an open date and a close date for that trading opportunity. And you can see right here we've got a 95.7% high probability setup, right? Swiss yen long position. So if you're not a fan of shorting the market, this is going to be more attractive to you. 100% win rate, 2.2% average return. Let's take a look, right? So bring out the go straight out to seasonality, and what Forecaster is saying is if we get in here and get out here, that's what it's basing that particular setup on. And if you bring on the seasonality over the last 10 years, over the last 15 years, right, you can see that not only do we have a high seasonality score, we also have high correlation, above 90% across all of those. But can you even optimize this even further? Because if I go from here to here, right, you start to increase the score. Okay, if you was to go from here to maybe take a bit of a longer term move till end of June, right, you've got 80, 80, 60, still high correlation. Okay, and again, you can take this as far as you like, but you can play around to kind of optimize the best window to get in and out. Now, as I said, as a trader, we're really looking for that in and out, that sure thing move, the most sure thing move that we could possibly get involved with. And for me, that would be this section here. So we're talking about today, or tomorrow, the 14th of May, or within the next day or so, until the 7th of June. So in the next couple of weeks, next 3 weeks tops. Okay, perfect. Now, you got some other data here that will tell you open and close date, open price, and the return, the average return, and the max drop in percentage, because that's got to fit your personality too. Okay, you don't want to be someone looking for these opportunities who has to endure a 10% drop, say, if you can't stomach a 10% drop. Right? Some people can, some people can't, right? You can see the weekly averages, pretty good. Thursday being the best opportunity. It would be the week that I fly away and I won't be here in the morning, but I'll still have my charts at the ready. The monthly average, but the daily average here as well. You can see, like, up here, we've got a few hundreds here, right? So it's kind of saying that the 7th, yeah, so these 100 days are going to be the ones that over the 5-year seasonality and 10-year and 15-year, right, have day 14 in this period are going to be the ones where you go long, right? So this is promising, because we could literally be in this trade tomorrow. So Swiss yen, what do we do now? What we do is we go over to the Swiss yen. Okay, so we go to the Swiss yen on the charts as traders. Now, you don't have to do this, because if you're just a quantum screener trader, you know that, right, okay, that's enough. That's enough for me. As long as you've tested that and verified it, and you know historically that that's been the case, and you can use the chart to do that. You can say, okay, well, let me just check out last year between this period. Let me check out the year before between this period. Okay, and that's what you do. You go out to here, right, and you say, okay, let's take a look, right? This is May. This is May 24. They're saying around the 14th of May, right, which is about here. And then they're saying June, so up to here, right? Bang, 3 weeks. In fact, this one went on for 9 weeks, 10 weeks, right? So you had this big run. And again, you can go, okay, well, that's not quite enough for me. I want to check out the May before that. and you say, right, okay, May the, what was it, 14th. So we're looking at May the 14th, which is about here, right, and till June. Bang, you got this big return, right, till the first week of June. There was a bit of a dip here. If you held it, you know, it continued up and up and up, right? And you can go back and you can test historically to get that confirmation, and that could be enough of a strategy for you. You could just be, right, I just use quantum screener. I'm a quantum screener trader, and that's it. That does all the work for you. It does all the analysis for you. If you want to use your technical analysis skills and your ability to read charts and optimize for the best entries, you know, you want to maybe see that dip that we just saw in the charts before. You saw this dip here last May, right? Maybe you wanted to wait for that dip. Maybe you wanted to wait for this dip. Well, then you can use your technical ability to do that, your technical analysis ability to do that, right? So where does that leave us? Well, I tell you where it leaves us. It leaves us in looking for price action patterns or some kind of entry technique that's going to allow us to get involved, right? Well, already what I'm seeing here is what we call a breakout setup. This is a compression channel, okay? And this compression channel here is primed for a breakout. This is what we see all the time. If you've been following my content for any amount of time, you would have seen me analyze Bitcoin, pound yen, dollar yen, all of those pairs. In fact, yen pairs are prolific for this as well. But what happens here is we typically break to the upside. So if I can just find my arrow tool here, we break to the upside. Okay, where are we likely to break up to? Well, look, we've got plenty of room for movement. We've got, let's just draw in some horizontal lines here. We've got our next high up here, and we've got another high. The extreme high is going to be up here, which I'd be looking for a counter move at that point, by the way. But with everything given, you know, in the quantum screener that says that we might make it till June, well, look, June, if price continues up, June's around here, okay? And I'm not saying we move, you know, you can't predict the shape of the equity growth in the market or the curve in the market or the growth in the market. But we've got May here, right? We're in the first 2 weeks, halfway through May. June's here, okay? Maybe we push up to this second high. Maybe we push up to the first high. But that's where you're going to be as a trader looking at position sizing, splitting up your position. Maybe you take some profit off here and trail stops up to target 2. Maybe you just shoot for the second target. Maybe you take your entire position off at the first position. But the hard bit is you're going to have a reason to enter this. So if you're a breakout trader, then great, you've probably got a way of just placing a buy stop order here, or you wait for the break and then retest, and then you set a limit order down at these highs, and then you're taken into the trade on a buy limit order. But if you're putting a buy stop order, what that means is a buy stop order is an order to your broker where you place a buy order above where we're currently trading, above the price we're currently trading. We're currently trading at 175.59. Your buy stop order would be above that at a predetermined level by you as a trader, because you know that if we break this previous high, it increases the probability of us breaking out and putting in that move. And then you're putting a buy stop order, which means if price reaches that level, you're telling your broker to buy X amount of position at that price point, and then, you know, you're long, basically, until your predetermined or mental target levels. So just looking at this, if you look on the 4 hour, we've got plenty of room to move. You know, we're talking about moving up to 177.23. Okay, so just to draw this out, 177.23 is going to be the first position, and then the second position is at 179.82. So 179.82, right? So either way, nice long opportunity there. And if you're thinking about how much you can make on that, if you took the breakout now, say, that's pretty decent. That's a nice little return. Now, what we're saying that's just under a 1%, right? What we're saying in Forecaster is it's 2.3%, I think it was. So the likeliness is, according to the quantum screener, is before the first week in June is over, we're going to actually push up and test this second high. Because if you look at the rule and you go from here to here, you can see that's 2.3%, which then correlates with the average return that we were looking at originally on the 2.2%. Decent opportunity. You've just got to have ways to get involved, right? So for me, that would just be a buy stop order. If I was to trade this pattern on this pair, it'd be a buy stop order, which means it decreases your profit target a little bit, but you don't miss the move. You get more opportunities that way. And with breakout setups, you're really looking for more opportunities, because what I've found with breakout setups is you miss them if you're not aggressive. Should we take a look at the euro yen as well? So what do you do if the Swiss yen isn't in your portfolio, but say the euro yen is? Well, here's the euro yen. Okay, we're down on the euro yen. It's the 9th one down, and we've got still an 84% correlation. Long position, 50% win rate. Okay, so this is really where it's going to depend on the risk reward profile being in your favor. Okay, so let's take a look at this, where we've got a 50% strike rate, still a 2.5% return, and this is saying between tomorrow and, again, kind of mid-June-ish, right? So let's take a look at this one. Now, if we go over and take a look at this, again, we can see this is to the 12th of June, but if we go back and do the same period that we did on the last one, and we go to the, say, the 7th of June, right, we can still bring on that seasonality again, right? Let's add on a seasonality here. So we've got 84%, 76%. You can bring on the 5-year as well that we had before. So high correlation in price right now. We've got above 50% on all of the seasonality scores. 100% in the last 5 years, 60% in the last 10 years. Again, around that 2.5%, 2.7% or 2.7% average. So it's a little bit better return than the last one. And then again, let's go out to the charts, right? So let's take a look at the euro yen. Let's go down to the euro yen. And remember, the key thing to remember here is we're looking for a wildly better reward to risk profile than we would, say with 100% strike rate. Okay? Because when you're right a lot, you can afford to have a lower risk reward profile. Traders who go out and try and get a 50-50 reward to risk profile and they're right 50% of the time, they're going to lose money, because broker fees, spreads, rollover costs, all that kind of stuff, that's going to eat away at your profit. And that means that if you're right 50% of the time and you're winning 1-to-1 reward to risk profiles, you're going to lose money over time. Does that make sense? So if you're right 50% of the time, you've got to have a higher strike rate. You've got to have a higher reward to risk profile. And if you're wrong more than you're right, you've definitely got to have a reward to risk profile that's skewed in your favor. Now, if you're right much more than you're wrong, then you can afford to reduce that reward to risk profile. Okay, so what we're looking at here, because we've got a 50 quantum screener, remember, we're not going off our own strategies right now. I'm going purely off quantum screener. So if you might have a strategy on this that's a 72% strike rate, right? But what I'm looking at is that 50% from quantum screener. Now I'm going to look at reward to risk profile. So when I'm looking at my entries, I'm looking at reward to risk profile instead. So I'm looking for how I can get involved, but what does that trade look like in terms of where I can go and how much I can make as opposed to how much I can lose when I'm wrong, if I'm wrong. So first things first, we're at a level of resistance, previous resistance. You can see that technically we are at this level of previous resistance, and the next high is up here. Okay, so I wouldn't want to personally take targets above this level here, and intraday, I'd be looking around here for my target taking. All right, and if you look on the trading time frame, that represents this period in here. Okay, and then how do you get involved? Well, you get involved by either waiting for the daily candles to push down into the moving averages. You might look for a pin bar down here and look to get long on a daily chore setup or something like that. But intraday, look, we've got, technically, we're testing this previous high. We've put in this pin bar. It's not filling me with confidence that we're going to break to the upside here. Okay, so it's really difficult for me to find a way in. Now, if you drop down to the hourly, one of the things that you might find, who you're familiar with ratio patterns, is you might see X, A, B, and then C, and then D, and everyone's familiar in the trading world with Gartley patterns. Okay, well, a Gartley pattern, we would need the C leg to push up to the 618. Okay, so that's a little way off yet, but if we can push up to 164.63s, that will give us the valid C leg, and then the completion point would be at the 127 extension from A to B, and then you could use that as your entry. And instead of taking conventional 382 targets, you could just maybe take half your position off there, or just look for that 166 level, just under that 165.89 level for targets. 165.89, whoops, 165.89, but a pretty decent profit on there if you can get involved. So what we're demonstrating here is a way of using Quantum Screener to identify the highest probability setups, the best trades as far as the analysis in the back end of Quantum Screener can give you, and then going out to the charts to find entries and then weighing up reward to risk profiles. So if you was to get into this one and use the bat pattern or the Gartley pattern as an entry, say, you can see we've now found a way, because our stop loss will be a 113 inversion below X, say, right? Because our target will now be up here, you've now got a 4-to-1 reward to risk profile. And when you've got a 4-to-1 reward to risk profile, that outweighs the 50-50 chance of being right. Make sense? Because you can be right 50% of the time, because you know that for every 4 trades you take, you can lose all of them, take one winner and make up for all the losers. Alright, so if you like this type of content, let me know in the comments. I'll put a link for Forecaster in the comments as well and in the description. And until next time, take care, and I'll see you then.